Okay, so we're back for part B, and honestly, this is very straightforward, right? Again, I'm going to give you all this template. I try to keep it as straightforward as possible. I'm going to give you some examples, maybe 5 or 6 examples, and I'm going to show you how powerful this is and how you can start to use this. So very, very hands-on this is, and hopefully you find that, that you can start implementing. Ultimately, let's be honest, that's why we're here. It's nice to learn about theory and etc. That's why I brought this little bit forward, rather than talking to you about sometimes why correlations exist and so on. I thought, let me just get you hands-on using this. So it keeps you motivated, and you can see that there's a very real, practical element to this. And hopefully you find it very useful in the sense that you will see this is really at the depth of what institutional traders are doing with their own trading. So look, let's get on with it. Basically, what I will do right at the start of the day, like I said, I'm not going to go into a full hypothesis. Very important you remember, because you may have your own edge. You might be using the edge and the basis that I've obviously helped you with in the Pro Foundation course. That's obviously for that. That's for you to develop using the Pro Foundation course. But let's say you have your hypothesis, your several factors, and you decide on any single day that you want to do A or B, whatever it is in the market. Now what you can do as part of your hypothesis, so you've got your hypo, factor A, B, C, D, and again that could be market profile, it could be VWAP, and if you're using the same framework as me, order flow, so here it could be market profile, obviously VWAP, intraday VWAP, order flow, and so on. Now you can add correlation into the mix. Okay, so we're going to focus on this section. I'm going to assume all of this is aligned, ready, good to go. Okay, so very, very important for you to know. And there's a reason I'm doing it, because I don't want you to get distracted by order flow, by this, by that. I'm purely interested here in covariance. Okay, I'm not interested in volume. I'm interested in price covariance. Okay, that is why, because I know a lot of you be wondering, I use a 5-minute chart here, a 5-minute chart here, and 60 minutes. Do you see it's all minute based? Very rare for me to use minute based. Obviously my execution chart is a volume chart. Very rare for me to use minute based charts, but I'm doing it for a reason. I don't want the effect of volume. Okay, I want to look at the price correlation between the two markets. So let's get that out of the way. So first thing I'll be doing, as I said, where you've got your correlation hypothesis. Again, I want to stress we're just focusing on that, because I really want you to think about, what's the topic? Correlation. I want you to become an expert at correlation. Okay, let's not get ourselves distracted with all these other things. Let's just assume they are there. Again, direct you back to the Pro Foundation material. Make sure all this is in play. I'm assuming it all is. If it isn't, there's no point even looking at correlation, right? I'm assuming tick in the box, tick in the box, tick in the box. Right, correlation. How can you enhance that? Enhance what you already have in your hypothesis. Add this layer in. Okay. I think I've got you guys to see that. I made my point there. First thing I'm doing is I will look at the correlation. I hinted at it before. What's the correlation been recently over the last week? Is there a correlation? So let's look at, for example, on this day, right? So this is 21st of July. You could be watching this in 1 year, 2 years, 3 years. It doesn't matter. These concepts have worked since markets began, and they'll work until markets get obliterated, and we have what do you call them? Meteor hit planet Earth in a million years and planet Earth is finished. Until that day, this is going to stand strong. Okay, so it doesn't matter. Don't pay too much attention to the date. Obviously for me it is the date, so I'm just going to mention it so we can at least compare the three. So 21st of July, I've come into the marketplace, right? I've obviously got quite a bullish bias, right? And that could be for a variety of factors, for my own personal kind of building blocks, right? Maybe based on market profile, order flow, obviously rotational market, looking at the VWAP, again, discussed to death in the Pro course. I just want you to now think about all those things are ready to go. Is correlation going to give me any more clues that that hypothesis that I already have, do you see, very key that you understand that, is likely to play out? Okay, well, let's have a look. So first thing I'm doing, sorry, I know I'm blocking some of this crude oil chart, but we're not going to use that right this very moment. So 21st of July, I come in, let me have a look at this. In fact, what I might do is I might just move this a little bit up. Just going to move this out, completely out of the screen, if that's okay. It's not letting me do it. Just give me one moment. I just want to make sure you can. In fact, let's just do that. Yeah, there you go. That's okay. Perfect. So number one, dollar yen. Right. You can start with crude if you want. Typically, I do start with crude. To be honest, I'll come over. I'll have a look, and I'll say, right, it's 21st of July today. So that is. Yeah, obviously you can do this on your particular day. It could be a different year. What's the correlation? Positive. So this is crude oil. Let's make sure I'm not blocking it. Let me put it here. Positive. Okay, and what? About 80%. Wow, very strong correlation. 80%. Crude. Very clear, right? So over the last week, as of this day that I'm trading, there's been a very strong positive correlation, okay, between crude oil and S&P 500. Now let's have a look at dollar yen on the 21st of July. Yep, we all agree. Negative correlation of coming into the marketplace about 9:30 in the morning when the market's opening about minus 50%. Even though that table said that's weak, I actually, like I explained before, because of idiosyncratic factors, that's actually very strong. So minus 50% negative correlation, dollar yen. Okay. Now, I do like to just keep in mind what it's been doing the last 24 hours. Obviously it's helpful, but you know, so you can see here it's starting to, it's kind of been nothing, so not much use for me over the last 24 hours. Not much correlation, so I'm not going to get anything out of the last 24 hours, so I'm fairly comfortable with going with the last week's correlation, which I know has been negative 50%, and then with crude oil, let's have a look. So this was positive, and you can see over the last 24 hours crude oil has started to get a little bit negative, but you can see it fluctuates. Okay, it tends to fluctuate. So obviously I'll be a little bit mindful not to, I might lower my risk or the amount of, how do I say it, emphasis I give it. I might slightly temper that a little bit, because I'll be mindful that, okay, over the last 24 hours on this particular day, sorry, here, do you see it's gone slightly negative? Okay. Do you see with the naked eye, you'd never be able to tell that. That's why I love this, because I can just tell here straight away what the correlation has been over the last sort of periods, 1 week and 1 day. So I look at those correlations, then I get rid of these, okay, because obviously I got limited space. I don't want to be too distracted. I don't look at these again then. That's it. I can move them out of the way. Now I can actually start looking at crude oil and dollar yen on this day. Right, so that is when I will know. So can you see it's kind of like a two-pronged process. A lot of people, when I see this, they make this big mistake. They'll be watching dollar yen and crude oil and saying, oh, crude oil, yeah, I can see crude oil's doing this. Oh yeah, it's kind of aligned. Oh yeah, oh, crude oil's just gone up. Maybe, can you see how ridiculous that is? And no offense to anyone doing that. Maybe they haven't, you know, that's why you're paying for this course, because you're getting this information now. That is not what institutional traders are doing. Okay, we want to establish the relationship there. Is the relationship there? Is there any even point me looking at crude today? I've just established that there is. Okay, had this been, on this day, here, for example, this is dollar yen. I won't even bother looking at dollar yen on this day. Okay, I'll just minimize it. I won't even bother looking at it. But we just established that actually these correlations are strong on this particular day. So let's actually go and have a look, right? On the 21st. Okay, let's have a look at dollar yen first. In fact, let's look at crude oil first, because we did pick that out first. So minus 80%. Okay. Can you see basically what has happened? Sorry, plus 80%. Just want to make sure I'm not blocking any of this, by the way. Move that up a bit. Yeah, there we go. What's basically happened is the market has been imbalanced all day. Are we all agreed? And then what has started to happen? The imbalance has started to fail. And it started to go rotation. Okay. What is the correlation between crude and S&P 500? Positive. What does that mean? That means generally, don't forget, this is not 100% based in stone. When crude oil goes up, S&P tends to go up. If this is happening, and you see this is about 9:30 in the morning, probably blocked some of that. Sorry, my head is blocking the timing, but just take my word for it. This is about 9:30 at the S&P Open. What would you expect the pressure to be? Would you agree? Upwards. Because we're now failing. The imbalance is failing and we're starting to go rotation. Make sure I'm not blocking any of that. Let's have a look. Look at the time. You can almost see the crosshair on both. Can you see where I'm buying? I just want to make sure I'm not blocking. This region is the equivalent of this region here. Hopefully you can see that. Where the correlation, obviously there's going to be reasons here. There might be absorbing, there might be the fact that obviously this is a rotational market. There's going to be other factors, as I've said. We might have some market profile areas down here, composite value areas. I don't know. I don't want to get into that because I don't want to be distracted. Because you can see you're just learning this right now. You need to focus on this and understand this for now. Then you can start to incorporate it slowly into your trading as that overlay. Correlation between crude and E-mini is quite strong the last few days, right? So is it any surprise coming into the US Open? So this is about 9:30 a.m. Is it any surprise that as crude starts to fail in imbalance, ES also starts to have the same sort of effect? Okay. Now, also going to look at dollar yen, which again, it's a lower correlation, but it's a negative correlation. Okay. Now, sorry, you may have seen everything just flicker there slightly. It's because I actually just went to fill up my glass of water, so forgive me for that. But yeah, where were we? So negative correlation on the dollar yen, so it was slightly lower, wasn't it? But the point is, it was a negative correlation. Okay, so actually pretty straightforward again, right? I now, do you see I've established this relationship of being negative? What does negative mean? Let's remind ourselves. We had some negative ones here, didn't we? There we go. What that means is when one goes up, the other one goes down. When one goes down, the other one goes up. It's still a relationship, but it's just negative, right? They're opposing. Look at the market condition here. Would you agree? Fairly, I mean, it tried to go in balance, but rotational, right? You'd expect dollar yen to complete the rotation, right? So straightforward. Obviously not always this straightforward, but generally you will find it is. Okay, when we're coming into buying, when I'm coming into buying the ES, can you see? You can see on the crosshairs, yeah, you can see that. This region is this region where I'm doing the executing. Right. What am I expecting dollar yen to do? I don't know why it's using this pen, I'm sorry about this. I'm expecting dollar yen to do what? Go down. What is it? Negative correlation. When one market goes down, what do you expect the other one to do? Go up. As you can see, a lot of downward pressure on dollar yen. What's happening to? It's upwards. Okay. What is this type of relationship for the last week? Negative. Okay. When the S&P goes up, what's happening to dollar yen? It's going down. Down. Okay. Look. Down. This is going up. So can you see why it's so powerful, this? It's not, again, it's not a holy grail by any means. Please make sure, obviously your hypothesis, is the main thing. You've got all that solid, you're happy with your order flow, main market condition, you're happy with the market being rotational on your own market. Can you see this is a fantastic overlay? And why I love this so much, because now I can use this to my advantage. Now let's go back, don't worry, we've got many more examples, a few more examples before we call it quits. And I'll make sure by the end of it you're solid on this. So this is the previous day. Again, real. I want you to show you real stuff. I've been open book. A lot of you know. I'm happy to show you stuff I've been doing in the market. Obviously here, again on an intraday basis. Context is. God, I hate this scrolling. In fact, it's very sensitive. This scrolling. There we go. Might actually edit some of the scrolling out just to save you having to watch me scroll. So this is the 20th, right? So let's go and have a look. Again, remember what we're doing? So I like to start with crude. I do like to start with crude. Obviously crude is a very popular market for futures traders. So they're heavily, a lot of commonality between the S&P and crude, so I love looking at it. Like I said, algorithms heavily active in both crude and E-mini, so there's bound to be a lot of correlation, because obviously they're going to be playing the two markets against each other and so on. So let's have a look at what day was it? The 20th, right? And again, this is just my market. Do this on at the time you're looking at this. Do it on your own market, okay? Could be January, February, March, who knows? The 20th is here. So in fact, I said we'd start with crude, didn't we? 20th is there. So very strong again, positive relationship. Right, plus 80. Put that there. Plus 80%. And then dollar yen on the 20th. Right, what's the relationship? It's okay, it's fairly negative, right? Obviously it's not as negative as it was. The previous day was like 50. It is quite a poor relationship. But it is there, negative, maybe 20 to 30. Right? I'll make a note of it anyway. Right, and that's it. I'm done with those. Obviously you can have a look intraday, kind of what they've been doing if you want to, as I mentioned. But we can see fairly strong positive relationship, right, on the 20th. So now what I do is I go to that, I'm on that day. I'm obviously already on that day because I'm trading it on that day. I'm on the 20th, right, and we can do this together. What would you be expecting here, right? So at the open, when am I trading? So what is it? It's about mid-day, right? What has the market, what is the market doing, right? It's an imbalance down, but it's become what? Rotational. Okay, so the market it's kind of down, but it starts to go rotational, right? Would you agree? It's becoming rotational at this point in time, over here. Now we already know the relationship is quite positive. So can you see where I'm looking to take the turn? Here. You can in fact see why my timing was off. You see here, I was quite early in the move in crude becoming rotational. See that there at the extreme of the rotation would have been a better area to take it. And if you know, that is actually where it started to work. This area is actually this area. This area, you can see why it was premature. It's actually down here. It's amazing. Actually correlates so nicely with crude on this day. Can you see that? Where I'm actually taking the turn is where you would expect the rotation, you know, like the second standard deviation. You see, this is quite early in this area here, very early. Look at where I'm taking it. And if you want to get very specific, that is actually this area here. Do you see? Terrible area. I don't know what happened. Obviously, lapse in judgment. And then we've got slight negative correlation with dollar yen. It's not the greatest, so I wouldn't, you know, be placing that much emphasis on it, but it is there nevertheless. So you can see coming into the trade, dollar yen is actually quite, in fact, where are we here? Yeah, rotational. So you would expect this to have some upwards pressure, which would put downwards pressure on the market. But the relationship, to be fair, was not that strong. You know, over the past week, it was only around 20-30%. But it worked. It worked. Let's be honest here. Look, the rotation was at the bottom. You would expect to obviously get any push up. So, you know, you could wait for dollar yen to start making its move up. And then, you see, again, if I had waited, I would have forced me to wait for prices to get slightly higher. But it worked really nicely. Right, as dollar yen pushed up, S&P 500 pushed down. Okay. Let's have a look at some other examples. And in fact, what I'll do is I'll scroll back to another example where there is some correlation, because, you know, there's going to be days where there's no correlation, and I'm not going to bother looking at those days. So I'll scroll back. I'll probably just edit it out. Okay, so I just saved you having to watch me scroll. I told you it's very sensitive, this scroll. Saved you having to watch me scroll back. So I've gone back literally just a few days to another good example of where I used correlation. So there will be times, like I said, where I'm not using it. Don't, you know, why force it? If anything, it's dangerous. Do you see? It can actually become a negative thing to be looking at correlation if you use it where there is no correlation. Now on this particular day, the 15th, I told you I like to start with crude. Let's have a look. 15th, again, very strong positive correlation on this particular day. So 80%. Let's make a note of that. 80% here. And then dollar yen. What day is this? It's the 15th, isn't it? Yeah. So yeah, there you go. Can you see? It's very strong negative correlation. Very strong negative correlation on the 15th, dollar yen. Almost minus 80%. Okay, so on this day, obviously you can see the market condition is obviously positive, imbalance up, probably some order flow, maybe some composites that are favorable to this being a long move. So what are we doing? So let's have a look at what I like to look at first. Crude oil. Yeah, there we go. Just getting my bearings. I don't even remember half the time what I was looking at the time. Obviously at the time I don't know, but it's very clear to me now, to be honest, once I've just had a quick second just to obviously double check. It's very, very clear to me what I would have been looking at. So this was a rotational market. Obviously the rotation failed and we started to go imbalanced. Right, you can see that it's very, very clear. This market is imbalanced. Positive. As the market comes in to this area here, which is the same region that I got long, you would expect there to be a lot of upwards pressure, right, in these areas. This area was this area. Okay, so you can see the correlation is holding very, very well. It's very supportive of this move. And then over here, if we look at this market, the market is exactly the same. the correlation, the rotation failed, and what do we start to do? Go imbalance down. We're going imbalance down, it's negative correlation. What would you expect? When it's imbalanced down, don't forget, negative correlation, covariance. Here, negative. So as the S&P goes up, dollar yen goes down, or when dollar yen goes down, the S&P goes up. Dollar yen goes down, what happens? S&P goes up. Can you see dollar yen is going down? What is the S&P doing? Going up. Okay, so you can see. That is how I'll be using it. I would have noticed that on this day. Don't forget it's quite late in the day here. Be mindful that, you know, when you're comparing these, it's late. It's the same time. So this is about 10:30 US time. 10:30 is there. You see here, the imbalance down is heavily established. So I'll be looking at that, thinking, all right, dollar yen is selling off strongly today. I've got a strong negative correlation. That may apply some upwards pressure on S&P. Oh, look at that. I've already got a long bias. I could be onto something here, right? Makes sense? Same thing with crude oil. Oh, look at that. Crude oil has failed its rotation and I'm starting to see an imbalance up. I've got positive correlation. So I would expect, you know, and we're all very advanced traders here now. Done foundation, done pro, hopefully. Done all the fundamental sections. I'm not really going to give you PowerPoints with tables and, you know, when this goes up, that goes. I'm not going to do any of that, right? I want you to really put in the time to observe, because it doesn't work like that. And hopefully you can see that with correlation. You know, you've got to, you know, and this is exciting to me. That's why you get paid, to do analysis. You need to analyze it, you know, make sure, is it positive, is it negative, is there no correlation? What's the market condition of the market that I'm comparing it to? You know, is it rotational? Is it imbalanced? Oh, if it's positive, okay, I'm expecting it to be the same market condition. If it's negative, I'm expecting it to be the opposite, right? We'll still have a look at a few more examples. Like I said, I want you to really understand it before I let you go. Let me just have a look before I start scrolling. But let me see if there's anything from the day before. Can't even remember. Like I said, I don't really. I'll be honest with you. I don't really. Nothing is good. I don't really pre-prepare any of this stuff. I don't want to just give you picture perfect stuff. I want to obviously give you, you know, what I'm doing, rather than me trying to find the exact things. So again, let's have a look at this. Just check this. I think the correlation would have probably been quite strong on that day because it was the previous day, wasn't it? So that, yeah, look at that, negative, heavily negative dollar yen. So my point is, do you see, I wouldn't even bother having dollar yen, but when I look at this and I see, what day is this? It's terrible. 14th. When I look at the 14th, heavily negative, I'm like, oh, that could be very interesting. Look at what is actually very interesting on this day. Not only is it heavy negative there, do you see that? Overnight it's been heavily negative. So that is like double effect for me. I'm going to be paying very close attention to dollar yen on this particular day, on the 14th. Very close attention to it. Went too far, didn't I? 14th, yeah, coming into the session. Just get this ready. So that's dollar yen, and then finally I've got crude oil. Ideally, we'd be looking at crude oil first, isn't it? There you go, on the 14th. Very positive, and look at that intraday, extremely positive. So again, very interesting, very interesting day. Right, positive, and over the last 24 hours it's been heavily correlated. Right, so obviously that is negative and that was positive, and for some reason I didn't write the amounts down, but that's about 80%. Okay, and Dollar yen, let's just remind ourselves. 14th, about 80% negative, isn't it? 80%. So strong negative correlation. So coming into the marketplace here, I am actually selling the marketplace, right? Okay, so let's have a look at crude oil first. Because usually I do focus heavily on crude. I think I've mentioned that a few times. Okay, so you can see why this would have been very useful to me, because the rotation failed and we started to go imbalance down, right? Do you see that? Heavily imbalanced down, selling, heavy selling, right? So it's actually around here that I was entering here. Can you see that? What positive correlation? 80%. The market selling off. What else do you need? Can you see? It's going to be very useful for you. You know, and this isn't like looking after the fact. I mean, in the moment, you're going to be seeing crude oil selling off heavily. It's going to give you so much more confidence to say, hey, you know what? I'm okay to actually be in this position in the S&P because the market's selling off, right? Now, what we'll do is we'll have a look at dollar yen at the same moment in time. Okay, so pretty much the same thing, isn't it? Imbalance up. Market has so much upward, you can see it all day. Upward pressure, upward pressure, upward pressure. Do you remember I said overnight as well, there was the correlation existed? So obviously we want to pay attention to that. Imbalance up. If it's negative, when dollar yen goes up, what do we expect the S&P to do? Go down. Remember this negative correlation? Dollar yen goes up, S&P goes down. Alright. Now what I'm going to do is let's just have a look. I think that's pretty much most of it. I don't know what else to say. I mean, really, you can see it's incredibly powerful and fairly straightforward. Let's be honest, to incorporate. There's no need to make it more. I'm hesitant to make it more complicated than that. I mean, maybe we could just see if I did anything the previous day. Could have a look at the previous day. Is there another one here? And then I think we'll wrap it up. Probably this whole period, these few days seemed to have some good correlation, didn't it? So let me just have a look here. This was the previous day, the 13th again. So again, no surprise crude because it's been positively correlated over this whole period. Positive correlation, very strong on the 13th. And then dollar yen, 13th, 0. Well, sorry, heavily negative correlation. Sorry, you might have just seen the whole screen jump a little bit there. Did actually again go to get some water. It's very, you can imagine, it's quite tiring doing all these sessions on the throat. So I do apologise. But yeah, so where were we? So I was just saying that, probably just making note of this. The negative correlation there, around 70-80%, and then just make sure I'm covering this. Obviously, heavily positive correlation of crude oil. So you can pretty much see what I'm doing. If we go back, if we go to the actual date on the 13th, right? Let's go and have a look at this. 13th, I'll move this. 13th. Obviously, just remember, I've only got these up because I've established the relationship. Otherwise, I wouldn't even bother having these up. Okay. So would we agree the market, crude, as I said, I like to look at crude first. Fairly rotational market, right? At this moment in time, let's go and have a look where we are. Right there at the cusp of the rotation down. Right there. And what is that likely to do? The relationship is positive. This is in an imbalance down. What's it likely to do? Put downward pressure because we're at the top of a rotation in crude. So you can see it's supported. Now, funnily enough, if you actually look at it, what happened after this rotation push down? Did crude oil continue to break down, which would have lent support to this continuing the imbalance? No, it didn't. Look what happened. bang, huge buying came in. What did that do? Stopped. Potentially, it was one of the factors that stopped the S&P going down. Okay. So my point is, look, I don't have a crystal ball. Obviously, I'm not going to know that is going to happen. But you see, I got out of the position. You see something like that happening, where we're going straight up. The correlation so positive. Why would you then start to keep selling this market? You wouldn't. Either do the opposite, which obviously here I don't think there was an opportunity to do that on the market condition basis of the S&P itself. But then step away. Right? Your sells are not working. Okay, I can assure you, other algorithms, big algorithms, are going to see that, and they are going to back off putting any downward pressure on the S&P 500. Okay, and you do not want to get caught in the middle of that, right? By trying to force through hand, and you can see how ferocious this was here. This buying that came in, you can see that there, right? Now we can also see here negative correlation on the dollar yen. It's around there. So all of this is happening around this period. What's happening on this day? It's an imbalance up. For all intents and purposes, right? More of like a VWAP style rhythm. So this is putting a lot of upward pressure. It's a negative correlation. When that goes up, if the correlation is negative, what do you expect? As this goes up, right, the other goes down, or the other way around, right? So as dollar yen, was rising, you can see it here. This was rising up. What was happening? Yes, was going down, right? Negative correlation. So that is one thing that would have supported my short bias, downward pressure. Okay, and then it kind of just collapsed, didn't it? It just failed and just went back to nothing, which obviously didn't help, and that suddenly this downwards pressure put upwards pressure on the S&P. So do you see, it's not only about, oh, how can I get in a trade? I'm in a trade. See if there's follow through. You know, obviously it's hard. Everyone's human, even me. Sometimes I won't be able to just keep an eye on this. You know, minute by minute, even hour by hour. Sometimes I'll forget, or I just won't notice it. But obviously that's something to bear in mind as well. See if the correlation follows through. You know, what would you like to happen? If this is a positive correlation with this, you really need this to sell off if this is going to sell off. It's okay if it just hangs around a little bit, but if it suddenly starts doing the opposite, you see, you can at least start questioning. You know, maybe I should be a bit tighter with my risk management. Is the positioning, you know, is there support? Is the supportive factor of correlation still there? Well, no, it isn't. Okay, so that's something obviously you want to keep in mind. So look, I think that is pretty much it. Plenty of examples there. I think the way for you to learn, just make sure I'm not plugging anything. I really think, and I think you agree with me, the way for you to learn is get stuck in. Okay, I'm going to give you all of this. What I suggest is that, so you'll have all of this, all right? You use this chart book. You go to your existing chart book. So I'm not going to give you the execution chart. You don't need it because you've already got it from the pro course. You'll have your market profile set up the way you like it, your footprint, your all your stuff. You'll basically have it set up in your own colors, your own way that you like it. So I'm not going to give you all of that, otherwise it would just be duplicated. Bring all of that stuff into this chart book, okay? Because all of this is sort of being set up now, and some of it interrelates to another chart of the S&P. Bring all of that. So what I mean by that is you've got this S&P, because this S&P, these charts are using to have them dual charts. You see on the left and right axis, two charts together. I need them to reference another chart, so I've got this running in the background. Okay, so it's easier for you if you bring everything over into this chart. Be nice and clean. Just put these on the side and just start experimenting. Basically, every day, come into the marketplace, check as I showed you the correlation. Does it exist? yes or no, move these aside. If it does, you know, bring the relevant charts into play, and then obviously decide. But honestly, the best way, hopefully you found that useful, that is really the heart of how professional traders use correlation. You know, I hope you've really found that useful, because that is pretty much what the majority of institutional traders will be doing. You know, and I appreciate there is going to be a lot of analysis. Of course there is, right? There's discretion involved. You will have to do analytical work, but I think that's great. I think that's actually a positive thing, that you need to do that. You know, nothing more annoying than just, you know this, right? Whenever you've been told, hey, you can just do this and do that and it will bounce here and that's how you can make money, you know that inherently, you just know inside of you that something's not right there. This is proper analysis. You can start doing it. It's exciting. Yes, it's difficult, but you will develop this by actually doing it, okay? Obviously, don't trade real money straight away on it. Use simulation. Make sure you understand it. Develop. You know, give it the time it deserves. Maybe a few months. Incorporate this into your simulation. Do not trade. Don't make the mistake everyone does. Don't just start throwing money at it. Make sure you understand it inside out. Watch these videos, obviously, again and again. I think a lot of it will become very clear. Practice makes perfect. Keep it as simple as possible. Obviously, you can play around with the markets if you want to, or you can just go with what I do, which is, like I said, I use crude oil, I use dollar yen, and that's it. And I compare them to the S&P, and that worked fantastically well for me. Or obviously you can experiment with different things. Don't forget, bring your stuff into this. So duplicate chart to chart book from your other chart. So you go into your other chart book, get all your individual charts, duplicate chart to chart book, and duplicate them into this chart book. Okay, move them over into this chart book. And then again, just to reiterate, move this stuff to the side. What I may do after this, I do want to just talk a little bit about why correlations exist and things, but honestly I think it's just not going to help you with your trading. It might help you get a job at Bloomberg, which I've said it before, but that's not, and there's nothing wrong with that. If you want to be a journalist, obviously do that. I talked about it before. Idiosyncratic factors are virtually impossible to break apart quantifiably from non-idiosyncratic factors. Very, very difficult. How are you going to do it? How do you even where do you even begin to quantify those factors? You can't. This is perfect because you can quantify correlation. And the pure fact is, algorithms, obviously on an intraday basis, biggest players in the market, this is what they're doing, right? How amazingly accessible is crude oil exchange traded volume and S&P crude exchange traded volume? They're playing the markets against each other. That's why the correlation exists. That is ultimately the relationship we're looking at. And then dollar yen obviously does have a very strong relationship as well. Some of it is down to financing reasons. I think a lot of that has become quite self-fulfilling now. And people just expect it. So obviously there is a correlation. We'll talk about that for maybe 5-10 minutes, just as a cap off just after this. But yeah, I really enjoyed putting that together, the correlation section. I hope you've enjoyed it too, and I hope it really brings as much value to your trading as it has for me. If you have any questions, best place really is if you're in the G7 community. Obviously you can ask away there. I think it's the best place to ask. But you know, the truth is, go and spend some time in, and I mean this is actually helpful, in private. You know, playing around with this, incorporate it into your trading. You know, don't overdo it. If there is no correlation, don't try and find it when it doesn't exist. But yeah, can't wait to hear about how this has enhanced your trading. See you in the next section.